Hello everyone and welcome back to economics based current affairs lectures. Today we are going to do a very interesting topic called as no, not money, but it is black money. So in today's lecture I'll tell you what is black money, what is the definition of black money, how to generate black money, what are the different ways in which you can transfer black money from one country or one place to another, what are the safe ways of doing it. These are the things that we are going to learn in today's lecture. We will continue this series of black money in the next lecture also. Why is it important? Because you are going to be the next future policy maker of India, and from you it is expected that you will take some steps in future which can reduce the generation of black money in Indian economy. For you to take steps to control it, you should know how it is generated. That is why I thought we will cover this topic in today's lecture. Last year also, we had done a similar kind of analysis of black money through our current affairs videos, and fortunately in both prelims and mains we got a question from black money which could be directly answered from our discussion. So hoping that this year if at all a question is asked from black money, you will be in a position to answer the question if you are following this series. Now what are we going to study in black money? In today's lecture I have planned that we are going to cover the theme black money, and under the theme we are going to cover definition of black money and a concept called as transfer pricing, then the concept called as BEPS and BEPS package. The full form of BEPS is base erosion and profit shifting, then a concept called as tax havens, and then a concept called as shell firms, and then Hawala. These are the concepts which we are going to do today. Now let me show you the news items which I could see in the newspaper, because of which I decided to create this lecture little early this year. Otherwise I had planned to do it later on, maybe around December. But the reason I am doing it now is because I read something in the newspaper and I thought that we must take this topic up in the class. So see, if you look carefully, you would recall that in the newspaper constantly we were reading that Government of India and the Enforcement Directorate are trying to investigate if companies like Vivo, Oppo, Xiaomi, all these companies have indulged in creation of black money in India. They were earning income in India. For example, companies like Vivo and Oppo, for example, they were earning 100 rupees in India. So what they were doing is, they were telling the government of India that they are earning only 10 rupees. Their real income was 100, but they were telling the government that they are earning 10 only. They were hiding 90 rupees. And they were sending this 90 rupees to China. This is the allegation by government of India. Because of that, we are studying this topic called as black money, to find out if this is true. So look at this news. It says that company like Vivo, Oppo, etc., they have sent almost 60,000 crore to China without reporting it to government of India. So when you don't report an income to government of India, they say it is black. So in this context, I decided to take up black money a little early. Then I also read in the newspaper, this is from a newspaper only, it says 23 shell companies to divert funds, which means that the concept called as shell company is also important in the context of black money, because this concept called shell company is used to transfer black money from one part of the country to another, or one country to another country. So shell companies are used to transfer funds illegally. So we are going to do details related to shell companies also. Guys, in the past, if you recall, there was something called as Panama paper leaks in the year 2016. In the Panama paper leak, it came out in public that there are many countries across the world, including India, where black money is created, and a company called Mossack Fonseca, which is a Panama-based company, it helps other countries where black money is created to take the black money from India to other countries and convert black money to white. So their job basically was to convert black money to white, Mossack Fonseca. So we are going to study this in detail. Now there was another news item in the year 2017. It was called as Paradise Paper. In Paradise paper, so we saw that there was a company called Appleby. It was a Bermuda-based company, and they were also helping other countries of the world where black money is created to convert black money to white. So this one also came in the news. Then we see there was another reporting in the news called as Pandora paper leak 2021. So you see there is a pattern. After every 2 years or 3 years, you see that there is some kind of news item which says that black money is being created across the world, and there are some countries which are actively involved in collecting black money from other countries and converting black money into white. So this time in this leak, it came out that roughly around some of the top 100 etc rich people, powerful people in the world, they are sending their black money to around 14 countries, and they are converting their black money to white. So if you look at the recent leaks, you will see that WikiLeaks in the year 2013, they told us that roughly 2.5 million documents are there which proves that black money has been created around the world and it has circulated. Panama paper leaks of 2016, look at the data, 2.6 TB. If you take a hard disk, 2.6 terabyte of hard disk will be filled with data related to this black money. Paradise paper 2017 said that there are 13.4 million documents with them as a proof that black money has been created and circulated in the world. Now, if you look at Pandora paper 2021, again there are 11.9 million documents which proves that black money has been created across the world. So because of these things, we decided to take up this topic called as black money in today's lecture. Now, as I told you that in today's lecture, we are going to do absolute basics related to black money. So for example, let me first give you a definition of black money. I mean, what is black money? So, let me give you a hint related to this topic. So whenever somebody would ask you a question that give the definition of black money, give the definition of shell companies, if definition related to anything is asked, from this topic, so definition of anything from this topic is asked. If you do not remember the definition, just start by saying there is no universal definition of this concept, right? And it is true, I'm telling you this. Don't take it as a joke, it's true. So if somebody will ask you what is the definition of black money, just start by saying that there is no universal definition of black money. There is only a generally, accepted some sort of guideline related to black money. So black money does not have a universal definition, but there is a workable definition which we use across the world. So what is the definition of black money? Let us understand. And by the way, my apologies, because this is not meant to offend any profession like a doctor or a teacher or an engineer. It's just an example. So suppose there is a doctor. Now, this doctor is visited by two patients, patient A and patient B. Patient A goes to the doctor and pays a fee of 1,000 rupees. This is the fee, consultation charge. When patient A pays the fee, doctor gives a receipt. Receipt means invoice, bill to patient A. Now patient B also pays the bill. 1,000 rupees is the fee, consultation charge. And doctor gives no receipt to patient B. Patient A gets the receipt, patient B does not get the receipt. Now the government of India comes to the doctor and asks a question that, Mr. or Miss Doctor, what is your total income? Doctor has provided services. It could be a doctor, engineer, teacher, anybody. So the doctor has provided services. Doctor has given bill to one patient, no bill to another patient. So now there is no proof that doctor has accepted 1,000 rupees cash, because this payment was made in cash. So the doctor takes this cash, keeps it in the pocket and hides it. So when the government of India comes, the doctor says that my income is only rupees 1,000. So The government of India says, okay, since your income is only 1,000, so 30% tax. For example, this is just an example. So the tax will be 300 rupees. So what has the doctor done? Now, the profession of the doctor is absolutely legal. See? So can anybody say that the profession of a doctor is illegal? No, the profession of a doctor is not illegal. The profession of a doctor is absolutely legal and perfect. It's a very noble profession because they save lives. But through legal profession, if you create income and hide it from the government or agencies and do not pay tax on that, this part of the income is called black money. And this part of the income is called legal income, white money. So a doctor through legal profession has earned two kinds of income. First is white money, second is black money. So why is it black money? Because the doctor is hiding this income from the government and doctor is not paying taxes on it. So guys, understand this, that through a perfectly legal activity, you can create two types of income. First is white income, second is black. So, if you want to find out what is black money, first you need to understand that black money can also be created using legal activities. That part of the money which you are hiding and you are not paying taxes, that is black. So in this case, black money is 1,000 rupees. Now guys, imagine that there is a person who is a criminal. That person, sells drugs. That person is involved in murder, theft, kidnap. So imagine that I am a criminal and I sell drugs. Is it a legal activity to sell drugs? No, it's illegal activity. My activity is illegal. Suppose that I am a person who is a kidnapper. My main profession is that I kidnap people, not literally, generally. So what do I do when I don't teach? When I don't teach current affairs to you guys, I become a kidnapper. When I kidnap people, I get money. So when I get money, that money is through illegal activity. So there are people who are criminals in the society who sell drugs, murder, kidnap, etc. Their activity is illegal and their income is illegal, black. So black money can be earned through two activities, one legal and one is illegal. So guys, see, how can you generate black money? Black money can be generated through two set of activities. First is legitimate activity, means white. Activity is good, like profession of a doctor. How can a profession of a doctor be used to create black money? So, create income and don't report it to the government of India. When you don't report an income to the government of India, you don't pay a tax. So, through legitimate activity, you create black money. Black money can also be created through illegitimate activity, for example, crime and corruption. Whenever you indulge in crime and corruption, whatever income you are earning is black. So black money can be earned through legitimate activity and through illegitimate activity, both, right? So you have learned that black money can be generated through both. Now guys, next question that arises is, what are the factors that lead to black money? Right? So I'm going to teach you the factors. Look at the factors. So the first factor is called socio-cultural factor. Second factor is called as illegal activity. Let me first tell you something about illegal activity. Now imagine we are a country or a society where a lot of illegal activity has started. And we as a country and society, we take no action against illegal activity, against drugs, against weapons, against kidnapping. We are not taking action, we are tolerating it. The moment you do not take action against illegal activities and you keep on tolerating it, what happens? People get more motivation to indulge in more illegal activities. So a society which does not take action against illegal activities, more black money is created in such societies. Right? Number one. Number two, look at socio-cultural factor. I'll give you an example. So my dad is an engineer, right? And not suppose, but I'm a faculty here, so I teach. Now, suppose my dad never paid income taxes. He used to earn a lot of black money. Now, when I become a faculty, my dad starts to tell me that we did not pay income taxes. Why are you paying taxes? Why are you showing your original income to Government of India? So now see what has happened. Just because my dad was not paying taxes, and if he motivates me not to pay taxes, and I also hide my income from the government of India, you know what I have done? I have normalized not paying taxes as a cool thing. My next generation will also not pay taxes, and they will say that my dad and my grandfather did not pay taxes. Now, what are we doing? If a particular activity is normalized in a society one generation after the other, it becomes a culture. So, what will be the culture in India now? Not paying taxes will become normal and will become a cool thing. Nobody will pay taxes and they will say, yeah, not paying taxes, how is it bad? It's good, right? So, socio-cultural, not paying taxes is cool. Now we have a figure in fact. So for example, in the year 2014 and 15, only 1.7% of our population paid taxes. 1.7% only, right? So in a country where not paying taxes is cool, that means people are hiding their income, and when you hide your income, you don't pay taxes, that income is called as black money. So in a society where the culture is to normalize hiding tax, that society will have more black money. These two factors. Now the next question arises, what is the method to create black money? How exactly is black money created? See, now I will talk about two methods here. First is called as crude method. Second is called as sophisticated method. What is a crude method? I'll give you an example. So guys, suppose that I have to buy a mobile phone. So what do? I go to Gafar Market. Gafar Market is in Karol Bagh. I go to Gafar Market and ask them, what is the price of this phone? Suppose they tell me that the price of this phone is 10,000 rupees. So I will then tell them that, okay, do one thing. Don't give me a bill. Don't give me a receipt. So when you don't give me a receipt, you don't have to pay taxes. So suppose somebody is selling the mobile phone to me. If they don't give me the receipt, whatever cash I give them, right? So suppose I give them this cash. This is 10,000 rupees. I give them the cash, I take mobile. So this cash, they don't need to show to the government of India. So this cash becomes black for them. So I told them that give me the mobile phone. Price is 10,000 rupees. I will make payment to you and I don't need anything in writing. The moment they don't give me a bill, this money will become black. So now I will ask for discount. I will say, you have not paid taxes to the government, give me discount. So they will sell this phone to me for 8,000 only. So sometimes we go in stores where they tell you that, sir, if you take, or ma'am, if you take bill, you will have to pay 10,000. If you don't take the bill, you will have to pay 8,000 only. Because they won't show this income to the government of India. So when you don't get any receipt, they will not give you any bill. That is called as out of books transaction. Books means maintaining account. The meaning of book is accounting. So whenever you buy something, you pay cash, that is put in the accounts. That is called as books. When they don't put anything in the official account, it is called out of books. Sometimes guys, when you buy a mobile phone from a store, they will not give you proper receipt. They will just write it in their diary, one mobile phone sold, and they will not give you the receipt. Or they will give you a temporary receipt without GST number, without any stamp of the store, without any name, etc. They will give you a normal paper and they will say one mobile phone sold. That is called as parallel books. Parallel books means one, there is official account, one, there is unofficial account. Unofficial account is a register where they just mention one mobile phone sold and they don't show this register to government of India. So when you say parallel books, means that kind of book or diary or account where they don't mention the details of who bought it, why they bought it, nothing. So these two methods are called crude methods of creating black money. One is you don't get any bill. That is called out of books. One is parallel books, means you get a kacha bill. Kacha bill means a temporary bill in which GST number will not be there. The stamp and signature of the store will also not be there. Then there is another method of creation of black money called as sophisticated method. Sophisticated method means creation of black money using something called as transfer pricing. I will teach you transfer pricing very soon. So there are two methods of creation of black money. First is called crude method and second is called as sophisticated method. Now to explain to you what is sophisticated method, let us take an example. So guys, imagine that there is a company called Jio Telecom, alright? Now this company Jio Telecom, suppose, buys a company called as The Hindu. And by the way, The Hindu is the same company which gives you newspaper, The Hindu. So The Hindu is a newspaper. So Jio Telecom is such a rich company that it buys the entire, company called as The Hindu newspaper. Now, when Jio Telecom buys Hindu newspaper, now Jio Telecom will put its advertisement every day in the Hindu newspaper front page. And since Hindu belongs to Jio Telecom only, Jio Telecom will make some payment to Hindu, right? Because if Jio Telecom puts its advertisement in the newspaper, Hindu, Jio Telecom has to pay for it. But now, Jio Telecom owns Hindu. So the payment that Jio Telecom will make to Hindu is not a normal price. It will be called as transfer price. Because the money is being transferred from one company to another, whereby one company owns the other company, directly controls the other company. So when one company controls another company and that company makes a payment to the other company, that payment is called transfer price. Now look at this. Guys, Jio Telecom is a telecom based company. Similarly, Amazon has a company called as Amazon Cloud Services. What is the meaning of cloud services? Cloud services means that you collect and store data there. So cloud computing means where you store data. Amazon provides data storage services called as Amazon Cloud Services. Now Jio Telecom has a lot of mobile phone subscribers because a lot of people have the connection of Jio. Jio needs to store that data, that who has Jio SIM card, etc., etc. So Jio Telecom tells Amazon that Amazon should strike a deal with Jio, whereby Jio will store its data in the Amazon cloud, and in return, Jio promises Amazon that Amazon company wants to become number one company in India in e-commerce. Right? You must have done shopping at Amazon website. So Amazon wants to become the number one company and wants to remain the best company in terms of online shopping. Jio also has entered online shopping through its online e-commerce business. So Jio promises Amazon that if Amazon gives some kind of help to Jio in cloud services, Jio will help Amazon to become the biggest e-commerce company in India. So Jio will help Amazon, Amazon will help Jio. This is called mutually beneficial relationship. In a mutually beneficial relationship, whenever Jio uses the services of Amazon Cloud, Jio will make a payment. When Amazon uses the help of Jio, Amazon will make the payment. So this payment will be called as transfer pricing. The payment between Jio and Amazon, the payment between these two companies, because now they are mutually beneficial companies, is called transfer pricing. Whatever payment happens, it has a name called transfer pricing. Now guys, you very well know that Tatas are a company which have so many divisions like TCS, Tata Motors, Tata Finance, etc. So suppose Jio Telecom needs a software for its telecom services. That software is made by Tatas. So Jio will contact Tata and Tata will sell the software. And suppose the price at which Tata sells the software is 1 crore. So this 1 crore rupees price at which Tata sells the software to Jio is called as arm's length price. So guys, whenever there are two companies and these two companies indulge into business with each other, whatever is the price that is charged between two companies when they are not related to each other is called as arm's length price. So in this case, Jio Telecom is totally unrelated to Tata's. So when two unrelated companies do business, whatever cash is involved, that is called as arm's length price. So guys, here there are two companies called Jio and Hindu. Jio owns Hindu, so direct control. Hence, the price involved between two companies where there is direct control is called transfer pricing. The price involved between two companies, right, where the two companies are in a mutually beneficial relationship, that price is also called as transfer price. But the price involved between two unrelated companies, where there is no relationship between the companies, that price is called arm's length price. So if anybody would ask you a question that what do you mean by transfer pricing and what do you mean by arm's length pricing, you just have to show this diagram and tell them that enterprises means companies. Companies are of two types. First is associated company and second is unrelated company. What is associated company? Whenever there is direct or indirect control of one company over another, like in our example, there was a direct control of Jio over the Hindu. So they are called as associated companies. Or whenever two companies are in mutually beneficial relationship, like these two companies are in mutually beneficial relationship, hence they are called associated companies. And whenever two companies are not related to each other, like Jio Telecom and Tata's are not related to each other, so they are called unrelated companies. So whenever companies which are associated, they do business with each other, the price that they charge with each other is called transfer pricing. And whenever unrelated companies do business with each other, the price that they charge is called arm's length price. Right? So now we are going to study what is the meaning of transfer pricing in detail. Now, look guys, I have taken an example of a company called as Apple, right? And I'm going to show you what actually is done by Apple in USA. Now, if you look carefully, this is just for example purposes, but majority of the part of the story which I'm going to tell you is true. Now, guys, see, there is USA and there is a country called as Bermuda, right? If you compare the taxes between the two countries, the tax in USA is higher compared to tax in Bermuda. In Bermuda, the tax is almost negligible. It's a very small country. So the taxes in USA is higher compared to Bermuda. So you see what happens. Apple is a very smart company. Apple has registered two companies, for example. One is called as Apple USA. See, Apple USA. And there is another company called as Apple Bermuda. Whenever Apple creates the new design of a mobile phone, like iPhone 14 is going to come. So the design of the iPhone 14 was registered in the name of Apple Bermuda, right? So whatever new design Apple develops, they registered that design in Bermuda and that registration is done by Apple Bermuda. So who owns the design of new mobile phone of Apple? Apple Bermuda, right? So now let's see what happens. This is Apple USA. Now suppose guys that in the year 2022 is this year. Suppose in the year 2022, Apple USA is calculating something that in the year 2022, its expected income will be 100 crore rupees, right? Now if its expected income is 100 crore rupees and suppose that Apple USA wants to launch new phone called as iPhone 14. So Apple USA will contact Apple Bermuda and Apple USA will import the design. It will buy the design from Apple Bermuda. Which design? iPhone 14. The design of iPhone 14 will be bought by Apple USA from Apple Bermuda. So when Apple USA buys the design, Apple USA pays a price of, let's say, 1 crore rupees to Apple Bermuda. So Apple USA buys the design and makes a payment of 1 crore to Apple Bermuda. So what is the net income of Apple USA? Net income expected 99 crore because total was 100, but they have made a payment of 1 crore to Apple Bermuda. So their income is 99 crore. Suppose the tax rate of Apple USA is 30%. So if their income is 99 crore, how much tax are they going to pay? 30% of 99 crore, which is 29.7 crore. This is the tax which Apple USA has to pay in USA. It's a very high amount of tax. Out of 99 crore, approximately 29 crore gone. So Apple USA plays a trick. What is the trick? Now Apple USA calls Apple Bermuda and tells Apple Bermuda that Apple Bermuda, now you increase the price of this iPhone 40 design from 1 crore to 10 crore. Right? So 10 crore is the price. So now Apple USA does not do this. Now suppose the net income of Apple USA is 100 crore and Apple USA will now buy the design from Apple Bermuda. Right? Design is bought and the payment for the design is 10 crore, which is paid by Apple USA to Apple Bermuda. So 10 crore reaches Bermuda. When 10 crore reaches Bermuda, the income tax here is 0.01%, which is almost zero. So what is the tax paid on 10 crore? Negligible. 1 lakh, 2 lakh, negligible. Now what is the net income of Apple USA? 100 crore minus 10 crore, 90 crore. 90 crore is the net income of Apple USA. In earlier case, the net income was 99 crore because the price of the design was 1 crore. Now price of the design is 10 crore, so net income is 90. Now 30% tax will be paid on 90. What is 30% of 90? 27 crores. So now Apple USA will pay 27 crore rupees tax only. In earlier case, it was paying 29.7 crores. Now it is paying 27 crores, which means they have saved almost roughly 2.7 crore rupees in taxes. And here they have not paid any tax. So guys, if you focus here, focus on the few things, right? If you focus here, you will see that a company called Apple USA has launched another company here in a country called Bermuda because the taxes in Bermuda is low and the taxes in USA is high. So see what a company does. Apple USA has increased the price of the design so that Apple USA can transfer some of its income. 100 crore rupees is the income, they are transferring 10 crore. So Apple USA has increased the price of the design so that they can transfer some of its income from a country of high tax to a country of low tax. This method of transferring income to a country with a low tax is called as transfer pricing. So if somebody will ask you what is transfer pricing, you should say transfer pricing means when prices are increased. Remember, the price of the design was increased from 1 crore to 10 crore. When the prices are increased to transfer income or profit from high to low tax economy, that concept is called as transfer pricing. Right? Now, I'm going to teach you one more concept which is called as base erosion and profit shifting. In short, it is called as BEPS. Base erosion and profit shifting. You see what happens. So guys, imagine this, that my yearly income is more than 5 lakh rupees, right? So if my yearly income is more than 5 lakh rupees, shall I pay taxes in India? Yes. Suppose your yearly income is 10 lakh rupees. Will you pay taxes in India? Yes. So all those people whose income falls in a category which has to pay taxes in India, they become a part of something called as tax base. So will I be a part of tax base? 100%. Will you be a part of tax base when you become IAS officer? 100%. So anybody whose income falls in the category which has to pay taxes in India, they become a part of tax base. So this is the tax base of India. Similarly, this is the tax base of USA, right? Now imagine that there is a company in India like Apple which is increasing the price of its design and they are sending some of the money from India to other country, USA. So this is India, this is USA. So suppose there is an Indian company which is behaving exactly like this. So suppose there is an Indian company. So this is not USA. Suppose this is India and this is USA, right? So suppose now that there is an Indian company whose income is 100 crore rupees, and they have increased the price of the design and they are sending money from India to USA. So when they send money from India to USA, they will pay a lower tax in India. So whenever they transfer their income from India to USA, suppose this part of the income they transfer to USA. So can we say that our tax base will be eroded? Let's see. So this is India, this is USA. Suppose an Indian company starts transfer pricing, and from India, the Indian company is sending money to USA, income to USA. So when you send income from India to USA, our tax base, this is our tax base is eroded. And how do you send income from India to USA? By increasing the price of design. So whenever a company in India will increase the price and then shift income from India to USA, the tax base of India will come down, it will be eroded. So this whole method is called as tax base erosion and profit shifting. Base erosion, profit shifting. Why is it called as base erosion and profit shifting? Because what happens in a transfer pricing, see, in transfer pricing, the prices of the design was increased from 1 to 10 crore. So prices are increased. Why are prices increased? To shift profit 100 crore from India to other country like USA. So guys, whenever some company in India increases the prices, to transfer income from India to USA, India's tax base is eroded. See, this part is eroded. And the tax base of USA increases. This is new tax base of USA. So through transfer pricing, is it possible that through transfer pricing, we can shift? Through transfer pricing, can we erode the tax base of India? Yes. So this is called as base erosion and profit shifting. So now I ask you a question, that can we say that base erosion and profit shifting and transfer pricing are same? No. Under base erosion and profit shifting, there could be many ways of transferring profit out of India. Transfer pricing is just one method using which the profit or income from India is transferred to other country. There are other methods called as round tripping and treaty shopping. So for example, this method is called as round tripping and treaty shopping. So guys, what is common between transfer pricing, round tripping and treaty shopping? In all these methods, whatever is the tax base of India, so this is the tax base of India. So in all these three methods, income from India will be transferred to USA. So our tax base will come down, the tax base of USA will go up. So 1, 2, 3, all these three things will lead to base erosion, profit shifting. Base erosion and profit shifting, because they shift profit from India to USA and India's tax base is eroded. So transfer pricing is not equal to base erosion and profit shifting. Base erosion and profit shifting can be done through many ways. One of the ways is transfer pricing, one of the ways is round tripping, one of the ways is treaty shopping. So these are different ways of base erosion and profit shifting. Fine. So if UPSC will ask you in how many ways can base erosion and profit shifting happen, you should say in many ways. Example, transfer pricing, round tripping and treaty shopping. And by the way, when I taught you this method whereby Apple company is shifting profit from USA to Bermuda. I taught you this. So did they use any illegal method which is not legal? No. So generally, that's the most dangerous thing. Generally, what the companies do is, in base erosion and profit shifting, generally, the companies indulge in base erosion and profit shifting using legal methods. So they use the existing loopholes of our system and then they transfer profit out of India. So see what they have done. Some loopholes were there in our system. The companies use the loophole and they transfer money out of India. This is called base erosion and profit shifting. So the companies use legal methods to artificially shift profit to a low or no tax location. And why is base erosion profit shifting done? To transfer profit from a country with high taxes to a country with low taxes. So if the tax of India is high and the tax of US is low, base erosion profit shifting will happen from India to USA. Alright. Now, how to control base erosion and profit shifting? So you know what has happened? The G20 countries, right? OECD, Organization for Economic Cooperation and Development. So the G20 countries, they initiated a system called as BEPS package, BEPS package, Base Erosion Profit Shifting Package. What is BEPS package? You see, any country which signs BEPS package, which becomes a member of BEPS package, so the moment a country signs this, so currently there are more than 140 countries which have signed BEPS package. The moment you sign BEPS package, suppose India has signed BEPS package. Now, so suppose, for example, let's say 140 countries have signed BEPS package, more than 140 by the way, so India is a part of it, suppose. The moment India signs this, India will have to make 4 promises. So all those who have signed this BEPS package have to make 4 promises. First, so harmful tax practices like transfer pricing, round-tripping treaty shopping has to be reduced. So harmful tax practices has to be reduced and eliminated. That's number 1. Number 2, treaty shopping, round-tripping has to be stopped. Third, country by country reporting. So suppose India is a part of this BEPS package, USA is a part of BEPS package. If India calls USA and says, USA, can you give me the details of all your companies who are operating in India and taking money from India? USA has to give it. Similarly, if USA requests India to get the details of any company of India, which is also there in USA, India has to provide the file. So when countries become a part of BEPS package, they share tax related information of each other's companies. This is called as country by country reporting. And if guys, India puts an allegation on USA that USA companies are doing transfer pricing, and if USA says no, we are not, so all these kind of disputes will be settled under BEPS package only. So if you sign BEPS package, these 4 concrete actions are taken, right? So this is BEPS package. So now guys, I'm going to teach something called as Hawala. So what is Hawala? See, it's very easy, it's not difficult. I will teach you Hawala. It's a very famous term, isn't it? So India is one of the pioneer countries of the concept called as Hawala. You see, to explain to you what is Hawala, I have taken this example. So now guys, this is Delhi and suppose this is Panama, right? So I'm going to explain to you what is Hawala. Now suppose that in Delhi, that's me, that's your faculty, and I have a very good friend in Panama. Fine. So see what I'm going to do now. So guys, look what I have got. This is 100 rupees. This is my black money. How did I get this black money? I told you, when I'm not taking your lecture, I sell, for example, weapons, I kidnap people, I sell drugs, illegal activities. So I collected this black money. I have to send this black money out of India to my friend in Panama. So see how I will do. If I go, for example, to a bank, first of all, so government of India will come to know that I have gone to a bank and they are going to Government of India is going to ask me a question, how did you earn this money? So this money becomes problem for me because this is my black money. So if I have got black money, I can't send it through a bank because Government of India will ask me a question, how did you earn this? So the only way which I have got to send this black money is through Hawala. So what do? I take, for example, imagine that this is not 100, this is 80 rupees. Imagine that this is 80 rupees. And I have to send 80 rupees to my friend in Panama. Suppose 80 rupees is equal to $1, right? So how do I send the cash? So if I am in Delhi, I will tell you some of the areas in Delhi which are very famous for being Hawala markets. So for example, Karol Bagh, Daryaganj, Chandni Chowk, these are very famous Hawala markets of India. So suppose I am in Delhi, what will I do? I will take 80 rupees and I will go, for example, to Karol Bagh market. In Karol Bagh market, I will find an Hawala agent. So for example, suppose in Karol Bagh market, the name of Hawala agent is Agent Vinod. So I will take 80 rupees to Agent Vinod and I will give the money to Agent Vinod. Agent Vinod has a friend whose name is Agent John, and this Agent John is in a country called Panama where I have to send the cash. So agent from Delhi makes a call to the agent in Panama and tells this person in Panama that, my dear friend, so there is a person who will come to you to collect $1 from you because I am accepting 80 rupees, and suppose 80 rupees means $1. So you gave 80 rupees to this person and his friend is there, he is also an agent, he will give $1 to your friend. Now how does this happen? So the moment you give 80 rupees to this agent in Delhi, this agent in Delhi will give you a password, a code. Suppose the code is monsoon. Right? The code is monsoon. So you have to pass this code to your friend. So the moment your friend goes to collect this $1, he has to say the word monsoon. So $1 is ready with this agent. But this agent will tell your friend that since all these things involve services called as Hawala services, so this agent is going to deduct some commission, example 0.1, $0.1. So $0.9 will be given to your friend, right? $1 will not be given because some service charge will be deducted. Look at the Hawala commission, it's very, very less. So what did you observe? That to transfer your money from one country to another, suppose this is Delhi, this is Panama. Is there a physical transfer of money between two countries under Hawala? No. Under Hawala, Indian cash remains in India and cash is delivered to somebody outside without physical transfer of cash. Under Hawala, do we require a bank account? No. No bank account is required. Under Hawala, do we pay a very high commission? No, we pay a very low commission. Under Hawala, do we need to go through any legal system? No. Is Hawala system running parallel to a bank system? Yes. Now let's see how a bank system works. Suppose guys, you have to transfer same 80 rupees to your friend in Panama through a bank. So see how it will happen. You will go and give 80 rupees. Suppose that's me and I take my white income, right? 80 rupees and I give it to a bank in India. The bank will take 80 rupees from me and the bank will tell me that they are going to give cash to my friend here after deducting commission. So if I give 80 rupees to the bank, 80 rupees is equal to $1. The commission charged by the Indian bank will be $0.3. So how many dollars will reach my friend through banking system? $0.7. The commission of the Indian banks is higher. And how much cash will reach to my friend through Hawala network? $0.9. So the commission here is less, the commission here is more. This is formal banking system. The beauty of formal banking system is things are legal, but the problem is commission is higher, right? So you see that Hawala network runs parallel to the formal banking system. Hawala network works on trust, faith. So if you give 80 rupees to this person, your friend can withdraw $0.9 here. Now, is there a physical connection? No. Is there a physical transfer of cash? No. Then how does this system work? This system totally works on faith. And let me tell you something, that black money is the most honest market. Black market is the most honest market. Why? Because they don't break promises there. Right? So, what did you observe about Hawala? That Hawala network runs parallel to banking system. The commission in bank is very high, but in Hawala the commission is less. In Hawala there is no physical transfer of cash, right? Only telephone call is required, no physical connection. Now, so what are some of the points that you need to remember from UPSC perspective related to Hawala? So first point is Hawala is a parallel system of remittance, which means if you have to transfer money or cash, you can use the system called as Hawala. It's a parallel system of remittance. Hawala runs outside formal banking system. It's not a part of formal banking system. No physical transfer of cash happens in Hawala. There is no physical transfer of cash. Commission is very low, but it is unsecured, which means there is no guarantee. But I told you, it is unsecured, there is no guarantee, but black market is considered to be a very honest market. So just based on trust, everything happens. But it is not secured by any written document or anything. Fine. Now, I'm going to now teach you something related to shell companies. What is a shell company? See, I showed you that there was a news. This was the news in India related to shell companies. So there is this company called Vivo. They said Vivo created 23 shell companies in India, and using these shell companies, Vivo transferred money out of India. How much money was transferred by Vivo? They say that roughly around 62,000 crore was transferred outside India. Abhi, what is this shell company and what is its function? So let me show you. Guys, look at this picture. I want to show you what is a shell company and what happens in this. So see, this guy is me. So I told you that I have a lot of black money. This is my black money. So see what I'm going to do. I am a black money holder. This is my cash. So what I do is, I come to Karol Bagh area and I will register a company in the name of XYZ company. So there is a building in Karol Bagh, there is a big shopping mall in Karol Bagh. In that shopping mall, there is a small space of office. I will register my company in that office in Karol Bagh. Name of my company is XYZ. The moment I open the company, what I will do is immediately I will transfer my black money in this company. Right? This money I have hidden from the government of India. Remember the doctor's fee. Similarly, I am a teacher, I am a professor. I can also have black money, which I don't declare to government of India. So I take my black money, I put it in my company which I have opened. So suppose 100 crore is my deposit in this company. The moment I deposit 100 crore in this company, immediately 100 crore will come out of this company. So the moment I deposit 100 crore in this company, immediately 100 crore comes out, and this 100 crore goes into a bank account. Because the moment you open a company, you have to open a company account. So this company has an account. So what do? I put money in the company puts the money in the bank. Now, if I want to ask you a question, suppose you are an IAS officer and you came to know that there is one company which has been registered and you come to check what is happening in the company. So see what you are going to do. You are an IAS officer, you come here and you ask a question to this company that, hi company, how much did you deposit in the bank account? So company will say 100 crore rupees. See? Then you will ask the company that, wow, 100 crore rupees you deposited. How did you get that 100 crore rupees? So company will say, I worked very hard. So then you will ask a question to the company. What work did you do? Did you manufacture anything? Company says no. Then you ask a question. Did you provide any service? Company will say no. So did you do any kind of economic activity? No. Without any kind of economic activity or with minimum economic activity, how did you generate 100 crore? They won't be able to answer. Then you ask them a question. How did you get this 100 crore? Did you get it from somebody? They will have no answer. So money comes in the company and quickly leaves. If you ask a question to the company that what is the source of your income? No source. If you ask the company what economic activity are you doing? No economic activity. These are the examples. Then you ask a question to the company that if you are a real company, you must be paying salaries to somebody. You must be having some machines. You must be repairing the machines also, because a real company has expenditure. What is your annual expenditure? This company will say negligible. Almost nothing. Look at the features of this company. See, so money comes and quickly leaves. So see what happens in this company. In this company, money enters and quickly leaves. What is the expenditure of the company? Low or minimum? No expenditure. What does this company manufacture? Nothing. What is the economic activity in the company? Nothing. And if you try to match the bank balance of this company with the sources of income, there will be no match. Because there is no source of income. There is no legal source of income. So if you ask them, how are they getting 100 crore? They won't be able to answer. Because this is black. So there is no match between sources of income and cash. And there is one thing which is very weird. If you look at the records, suppose this is a big shopping mall. This is a big shopping mall. In this shopping mall, there is one office. I told you I registered my company XYZ in the name of this office. If I registered 21 more companies or 22 more companies in the same address, so all the 23 companies will be registered in the same address. Money will come in their account and money will quickly leave. These 23 companies are called as shell companies. That is what Vivo did. So you use same address and you register 23 companies. Right? So this is called shell company. Recently, after demonetization, when the government of India started to catch the companies in India, roughly 2 lakh shell companies were discovered and government cancelled their license. So what is a shell company? A shell company is generally used as a medium to transfer money from one place to another. So for example, if there is a black money holder, they will put the money in this company. The company will put the money in the company account. And in this account, the money is waiting. Right? From this account, through Hawala or through different methods, money will be sent to other countries. Because the moment money comes in the bank account, digitally you can send the money to any part of the world. So what did Vivo do? Vivo created such a company and Vivo started to send money from this bank to China. And how much money was sent? 63 crore rupees was sent. This is the allegation by government of India. So this is shell companies, right? So guys, if somebody will ask you that what is a shell company, just tell them that there is no universal definition of shell companies, but government of India appointed a committee headed by Mr. Hasmukh Adia. He was the finance secretary of government of India. So government of India appointed a committee under Mr. Hasmukh Adia that his job was to define what is shell company. So he said, there is no universal definition of shell companies, but we can identify a shell company based on these features of the company. So if a company is fulfilling these features, maybe, just maybe, that company is a shell company. There is no guarantee that it will be a shell company, but maybe that company is shell company. Right? Now, now we will look into a concept called as tax havens. What is tax havens? So, see guys, let me give you a picture of tax havens. So suppose this is India. In India, that's me. And what do I have? A lot of black money. Rupees 100 crore. So see guys, that's India, that's me. And what do I have in India? I have 100 crore black money. Now, what am I going to do? So through Hawala, remember I taught you Hawala, Agent Vinod and Agent John. Through Hawala, I am going to send my cash to a country called Panama. So through Hawala, my cash reaches here. The moment my cash reaches here, what I do with this cash is immediately open a company called as shell company. Immediately I open a shell company, right? So this 100 crore comes in the company account. So there is a bank. So this bank will have my 100 crore rupees now. The moment my 100 crore rupees reaches here, Government of India gets to know that money from India, 100 crore, has been transferred to a country called Panama through some internal sources or networking. So suppose you are an IS officer and you come to Panama and there is a government of Panama. So see, this is the government of Panama. If you come here, you ask them a question and you will tell them that I am the IS officer of India. I want to ask you questions. So they will say, okay, welcome to Panama. Tell us what do you want to know. So you will ask a question that government of Panama, can you please tell me who is the owner of this company? So Panama government will give you an answer that no, we can't tell you who is the owner of this company. Then you ask a question to government of Panama that can you please tell us who is the owner of this bank account? Panama will tell you, sorry, we can't tell you that. Then you ask a question to the government of Panama that, suppose guys, that's me. So if you ask a question to government of Panama that, so there is a person called Jayant Parikshit, does he hold any wealth or property in your country? They will say, sorry, we don't give such answers. If you ask them that, is Jayant Parikshit doing any economic activity? They will not answer. Is he owning any wealth? They will not answer. Does he have any account? He will not answer. The government of Panama will not answer. And if you tell them that why are you not answering, we want to know it. If black money from India has come here, they will say, my country, my rules. So they will tell you that there is a clause in this country called as secrecy clause. So this country called Panama has a clause or a policy called secrecy clause. Under this clause, they don't declare any information related to wealth, economic activity or account. Generally, such countries who have these kind of clauses also has some extra features. In these countries, generally, the tax rate is either negligible or close to zero. So for example, the tax rate will be 0.01%. So either zero or negligible. Generally, these countries are geographically very small. And if you look at their economy, they don't have things like manufacturing, industry, etc., etc. They are generally, I'm not saying exceptions are not there, but generally, so their taxes are close to zero and generally they are geographically small. So these type of countries are called as tax havens. So what are tax havens? So I showed you that you take black money from India, bring it to these countries, open a shell company. Through this company, put the money in the bank account and your money is safe. If you ask me a question that if they don't put any tax, how do they earn income? Panama. So I told you that suppose the tax rate in this country is 1%. Example 1%. So if 100 crore from India comes here, they charge only 1 crore as tax. But I told you that from across the world, black money reaches here. It's not 100 crores, trillions of dollars reach these countries. Trillions of black money reaches here. So when they take, so suppose, $20 trillion reaches here, $20 trillion. And if, or maybe $100 trillion reaches here. Out of $100 trillion, example, 1% of 100 trillion is $1 trillion. So $1 trillion is their tax revenue. So they are charging very low tax, but if they are charging low tax, the amount of cash they are getting is this much. So 1% of this much is also big. This is how they earn income. So if somebody will ask you that, what is a tax haven? You should say there is no universal definition of tax haven. And guys, this term tax haven has been mostly used in international scenarios since 1950s. The term tax haven has been used a lot since 1950s. Now, what are some of the common features of tax haven? Generally, they are small geography, but there are some big countries also which are tax haven, like UAE. It is also considered as tax haven. So that is why I have written generally small. And I told you there is no universal definition, so there can't be a perfect definition. Now here generally the tax is either low or nil, which means either very low, right, 1%, 0.5% or 0. So either low or nil. Limited information sharing. They don't believe in information sharing because if they share information, they'll be caught. Liberal regulation. I told you that the moment black money reaches Panama, immediately a shell company is registered. You know how long it takes to start a company in Panama? 1 minute. But if you want to start a company in India, it will take you 15 days. But in Panama, 1 day. In India, if you want to start a company, you will have to take GST number. GST registration will take 2 weeks. But in Panama, in 1 minute, you can start a company. So the rules and regulations in such countries are very liberal. And there is a secrecy clause. I told you that they maintain secrecy clause. If you ask any information related to wealth, economic activity or account, they will not share the information. Right? So guys, if you focus on today's lecture, I have taught you something. See, so I have taught you these concepts. In black money, I have taught you definition of black money, transfer pricing, BEPS, tax haven, shell firms and Hawala. I have taught you these things. Now, if you focus on point number B, C, D, E and F, these points, if you focus on these points, guys, in the next lecture, when we meet, I will use point number B, C, D, E, F to teach you something called as money laundering. Money laundering is a concept which is very sophisticated, and money laundering uses all these concepts. So I would urge you that you should revise whatever I have taught you in today's videos. I am also going to attach this entire PDF for your revision purposes. Use this for revision so that when in the next lecture I teach you money laundering, you will easily understand it. So basically, I call this 1, 2, 3, 4, 5, all these concepts as tools of money laundering. So if you know these things, money laundering becomes very easy. So that we will do in the next lecture. So thank you so much, guys. See you in the next lecture with money laundering.